Welcome back. Well, the Solidarity Research Institute has released its bank charges report for 2023. It exposes the impact of rising inflation and interest rates on customers. It also shows that banks are under pressure to adapt their prices and reward schemes. To discuss this further, I'm joined now by economic researcher at the Solidarity Research Institute, Theuns Buisson. Theuns, thank you so much for your time this morning. Let's talk to a little bit about this issue of bank charges. I mean, South Africans know it, right? We feel it every single time we actually have a transaction or every time we deposit money that there's bank charges. And the big story behind it is about how banks are trying to become competitive in the market, but also try to woo potential customers with having lower costs and the like. But what does this report particularly actually show you?
Yeah, we've seen, just like every other year that we've started doing this report, that bank charges are becoming more and more competitive. And banks are moving, for the most part, closer to each other when it comes to cost. And then, especially in the case of FNB, First National Bank, we've seen that they've included a massive list of free transactions, which gives them the winning position in almost all the categories we've come up with. And then another interesting turn of events is that just as Capitec disrupted the market a couple of years ago, and they came in with very low costs, which isn't always the case for every customer anymore. Capitec is still one of the cheaper banks, but not as cheap as they used to be. We see something similar happening now with the new online banks like Bank Zero and Time Bank coming in and massively reducing cost. There's really no reason, if you don't do many large cash transactions, to not give a look at Time Bank and Bank Zero. They come in on our list of transactions at about half what some of the traditional banks come in at.
Yeah, but at this moment in time, Theuns, I wonder if customers can actually afford to even have these bank charges. And sometimes they're secretive, hey? These bank charges come at you when you least expect them.
Yeah, that's also another reason for compiling this report, so that customers know what they're paying for. For instance, we expect card swipes to be free at this stage in time, and I think last year they were free at all banks and for all accounts. But now you see some of those cheap pay for transaction accounts, specifically the Standard Bank MyMo account, now started charging people for card swipes again. As far as I could see, that's the only account that does that. And yeah, that's only on their MyMo pay-as-you-use account. So it's not the norm yet, but while everyone's reducing charges, some charges are making a comeback. But overall, I must say, bank charges are being reduced. And we should also take into account that South Africa's banking system is modeled on the idea that banks make money, not so much on taking your money and lending it to others, but also specifically on making money from transactional charges. Yeah. And it will take a very long time to step away from that model. And hopefully the introduction of the new online banks will help steer us in that direction.
Yeah. You know, on the other side of it, I mean, you're speaking here about how banks, for example, rely significantly also on the charges per transaction. But it also is about the affordability of the customer. And if customers can't afford it, Theuns, then it definitely actually poses a threat to the consistency and the sustainability of banking. You know, if it's cheaper to put your money under a mattress than it is to put it in a banking institute, then obviously banks are going to have to then start having these conversations and actually start adjusting their models so that they can ensure to actually retain the customer. Are we seeing a deliberate shift, therefore, especially within the banking sector, to try to make these costs as minimal as possible so that we don't see more and more people opting to rather be unbanked than to be charged?
I don't think that's the case necessarily. I mean, we do have the new banks offering cheaper accounts. We have seen, especially ABSA in years past, and FNB more recently coming in with a massive focus, Capitec as well, on the unbanked banking sector. And Time Bank and Bank Zero as well is really going out of their way to make banking affordable. But then we also see Standard Bank and Nedbank just clearly targeting a different market segment in that regard. So I don't foresee bank charges causing people to rather go unbanked. We also still have the Post Bank that offers basic services. So I don't see cost as a limiting factor in this regard. I mean, if you manage your transactions well, mainly just pay with your card on the online banks, your bank charges would be zero. They only charge you for added value services, such as drawing cash from other banks' ATMs. I think it's a R3 charge for drawing from a supermarket counter. So, yeah, it's really only if you make use of services that charge you would you pay anything. So, especially for people who are currently unbanked and people like grant recipients or who do very minimal transactions and don't do instant payments, for instance, or need to draw wages or anything like that. The online banks are really a good option to look at. Last year, after compiling this report, I moved to one of the new online banks, and I really can't complain. My bank charges since then, I think in the last year, I paid what I used to pay in a month. So I'd recommend it.
Yeah. Theuns, I think you just became an influencer, just like that. But much appreciated for your time this morning.